Hi, I'm Charlene Rodriguez. Welcome to Canam's EB-5 Abbreviated, where we answer your most common EB-5 questions in 5 minutes or less. We're joined today by Jose Tadeu Ferreira, partner at Leaf Ferreira de Araujo LLC, a boutique law firm focused on the highly specialized fields of foreign investment and self-initiated immigration in Miami, Florida. Let's begin.
So the EB-5 program was created in the early 90s with the goal of attracting foreign investments into the US economy to create US jobs and in return, approve green cards for the investors. Now, some of the basics of the EB-5 program, and this has changed drastically a little over or just about a year ago, but essentially, the investor must make an investment, an at-risk investment. So it's a very common question, can I invest in the stock market? Can I buy property? And that's not considered an investment that qualifies for EB-5 because in the case of a property, the investment is not considered to be at risk. In the case of investing in the in the stock market, it doesn't directly create jobs. So what has never changed is a job creation requirement for EB-5, and that is 10 jobs per investor. This is absolutely critical because if an investor creates only 9 jobs, it's possible that the EB-5 will not be approved, even after having made the investment. So 10 jobs is absolutely critical. And as I said, the capital must be at risk. Normally, there are 2 options where you can invest, either a regional center or what they call direct investment. In the event of a direct investment, the person can, for example, start their own business or invest in a particular business where they'll have shares in, and this business will then create 10 full-time jobs on payroll. Now, investors normally consider this to be greater risk because they very often do not have experience with the US economy, with US businesses, and thus the vast majority, 90% plus, prefer to invest in the regional center model. So the regional center model essentially is an investor will invest into a fund. This fund will then either invest in a development, which they call the job creating entity, or they will loan funds to a job creating entity. In this case, the developer will create the jobs for the investors. The investors are not obligated to create the jobs directly. There is a greater also facilitation in the way that they count jobs, because in this model, you will count not only the direct jobs, but also the indirect jobs and the induced jobs. And thus, it becomes much easier to create the jobs per investor, which again is the most critical aspect. Immigration, USCIS, they're not concerned with whether the investor will get their money back, will make a profit, or will lose their money. That's directly between the investor and the project. What the USCIS wants to see is job creation. And as long as the jobs are created, regardless of what happens to the investment, the green card will then be approved. The amount of time that the money needs to be invested will vary. It will depend normally on the agreement between the investor and the project where he has invested. Normally, especially when it comes to the loan model, this investment will be committed to the project for minimum of 5 years, very often up to 7, which are 1-year extensions for a total of 7. And then if everything goes well, the money is returned. Very often there will be an interest rate as well, or maybe a share of the profits, it depends. But normally it's very important that the investor understands that the most important analysis in the EB-5 is the safety of the investment, the job creation, and eventually the return of the capital. I will often tell investors that you are not going to make a lot of money with the EB-5. If a project is offering you a high return, that means you will also be assuming high risk, because nobody will pay or offer to pay higher interest if they can get the money elsewhere. And when somebody offers higher interest, it's because they are not able to finance their project in another way. And naturally, this will involve a greater risk. So if the person's seeking EB-5 and the ultimate goal is most often the green card, you're better off investing in a safe project, in a conservative project. The interest rates will not be high, but you will get your green card and you will get your money back because it's a safe project. So that's what people often look for. After April, when the investment amount was changed, for many years it was 500, then for a period of about a year and a half or so, it was 900, but then Congress finally came to an agreement. Now we have an amount of 800 for targeted employment areas, rural projects and infrastructure projects, and then $1,050,000 for any other investment. Many of the projects, especially the ones that are via regional centers, you will be able to invest the $800,000 amount. You will also have to keep in mind that there will be an administrative fee that needs to be paid. This will vary from project to project. This amount is a one-time payment. It's used to cover all of the costs that the fund has and the regional center has to create the project, to structure the project, to audit the project, and accompany the investor and during the whole time of the investment. So the $800,000 investment is available in those specific examples: rural projects, infrastructure projects, and targeted employment areas. A targeted employment area is an area that has 150% of the average unemployment rate of the United States. So this will vary. It needs to be updated now on a yearly basis. So it's very important that the investor consider all of this and analyze whether the project does in fact qualify for these. It's obviously a very important advantage to be able to invest the lower amount, and there are excellent projects that offer this.